All right, guys, we got the Fed minutes report coming live in about 48 minutes or so, 48 minutes. We'll put a timer up. FOMC minutes goes live. Yeah, we're going to give a full summary and breakdown. All right, so I'm going to put this up on screen so you guys can see it here. Give me a second. There we go. All right, so again, the FOMC minutes report goes live at 2 p.m. Eastern Standard Time. Remember, this is not a Fed meeting. So a couple things just happened. So Treasury Secretary Bessent canceled his appearance before the Republican Study Committee today due to meeting with the president. Yeah, so... you guys are doing it. Are you guys red or green today? Honestly, Nvidia bounced back over 100. Apple bounced back over 180s. NASDAQ up to over 17.5 still here. Over 17.5 still. Walmart CEO says they have not canceled any orders yet from overseas in China, India, or Mexico. So... I guess that's an optimistic thing. Yeah, I'll get a timer up. Hold on. Let me get this rolling here. All right, so this is when the FOMC minutes comes out, about 45 minutes. 45 minutes. Now, remember, the FOMC minutes report is not a Fed meeting. This is a reaction to the last Fed meeting. It is not an actual Fed meeting. This is a reaction to the previous Fed meeting. And this is a 12-page document that goes live at 2 p.m. on the dot. We are going to summarize everything, break it down immediately, cover the market reaction, and more. We're going to use AI to break down, summarize it very quickly, give you guys, the most important metrics and the most important updates from this report using AI, quickly is what we're going to do. We're going to break it down. We'll have thousands of people tune into this because this is what we do here. And so... yeah, we put a timer up. Definitely got puts on the deck. I actually love this push up. I'm gonna ride the SPY back down. What are your thoughts on the potential liquidity issues in bond market? Yeah, I mean, looking at treasury yields, if you want to take a look at it here. Treasury yields have kind of been backwards. They've dipped a little bit, which is a lower interest rate sentiment. French Spirit and Wine Lobby says European countermeasures avoid increasing tension for the sector, but do not resolve the difficulties. And again, markets are mostly bouncing back on this report. Yeah. And again, as we get closer and closer to this report, we're going to have thousands and thousands of people here. It'll be fun. We'll see what happens. I'm trying to look at, let me see what we got here. Yeah, so the last FOMC meeting, they paused rates. Taking a look at the expectations for the next meeting. I want to see what this is going to do here to markets. Look, so currently, we talked about, this has been going back and forth, honestly, back and forth. As of now, we got about a 36% chance likelihood of a rate cut, about a 64% chance likelihood of a pause. This is a pause. This is a cut, a 25 basis point cut. So at this point in time, we're still pretty probable that we're going to pause rates next month in May. Now, again, just to give this some perspective here in economics, if you want to learn about economics, listen to what I'm about to say. I do this at least once every major FOMC stream. Now, the Federal Reserve, their job is to balance the economy. Like, a strong economy is not always good because a strong economy can lead to inflation and inflated prices, which is inflation, of course, right? So the Fed's job is to make it balanced. They want the economy to be strong, but not risking super deep, high inflation problems. And so that's their job. They want to keep it balanced. And they got a number of tools to keep it balanced. They can lower interest rates, rate cuts, and again, at this point in time, we got a 36% chance likelihood that we're going to cut rates next month. They can lower rates. If the economy is really weak, this is what they'll do. They'll lower rates. They'll bring interest rates down. By bringing interest rates down, people have cheaper access to money through loans. Businesses have cheaper access to money through loans, and they can expand, and it stimulates the economy in a lot of different ways, influences spending in a positive way. If it's a really desperate thing, like 2020, 2020 super desperate supply chain problems, all the stuff going on in 2020, they can do a more desperate measure, which is called quantitative easing. It's a form of money printing where they create bank reserves, and then they use those bank reserves to buy up a bunch of bonds, and this injects liquidity into the economy and markets. Now, the consequence of all this stuff can be inflation, right? And so an example of this is like after 2020, they did all this stuff, and they did QE. They injected liquidity. They also sent out stimulus checks. So in 2020, the inflation that we're still dealing with modern age today is partly because of what happened in 2020. We had all the problems in 2020. They did QE. They brought interest rates down to almost zero. They injected liquidity through QE. They sent out stimulus checks, and supply chains were shut down to a certain extent. That's four big things that can contribute to inflation. And so within a few years after 2020 and 2022, inflation spiked up to 7 to 10%. And that is the inflation that we're still dealing with modern age. And so when inflation spikes like that, and the labor market is too strong, the Fed will pivot to the other side of it where they want to be what's called restrictive or hawkish, and they will raise rates. And by raising rates, they're taking liquidity. By raising rates, they are essentially pushing the economy down to try to make inflation decrease. Look at Nvidia spike up here, guys. Nvidia spiking up to 103s, almost 104s. Look at Treasury yields. Yields and interest rates follow each other. They're spiking up right now. 4.4% 10-year Treasury yield. Look at the NASDAQ pop. NASDAQ popping up to almost 18K. But again, when the Fed goes restrictive, they're trying to push the economy down a little bit to control inflation. They can also do QT, which is basically letting their balance sheet reduce and run off. And this restricts liquidity and ultimately can combat inflation as well. They're still doing QT, by the way. It's not as severe as it was. They reduced it by 80% last meeting. And that's something that you want to listen for in this FOMC Minutes report, is like what their plan is for future quantitative tightening measures. Like, are they going to continue the 20% of QT that they were doing? They reduced it by 80% in treasuries. Are they going to continue MBS QT, which can influence mortgage rates specifically directly? It is just something that you want to pay attention to. But like, that's the Fed trying to keep things balanced. These are all things you want to listen to. You also want to hear recession outlook. Like, I'm looking for recession outlook. I'm seeing if they're talking about recession worries, inflation worries, economic worries. And if, you also want to listen in this FOMC Minutes report about what their plan is to control interest rates. Okay, guys, so the president raises tariffs charged to China by the U.S. to 125% effective immediately. The president just raised tariffs charged to China by the U.S. to 125%. It was previously 104% effective immediately. Wow. That is some news. Alright, guys, that just happened. Honestly, the markets are kind of reacted favorably to this. Look at the NASDAQ up to 18.2s. Look at Nvidia up to 105s right now. Could be the bond auction that's happening. We had the NY Fed RRP OP demand at 168. Previously it was 157 across 31 counterparties. Interesting. Oh, 90-day pause. All right, so raising tariffs charged to China 125% effective immediately. More than 75 countries in contact with us to negotiate. He authorized a 90-day pause, lowered reciprocal tariffs of 10%. Let me update this. Yeah, so again, that is what's making the market pop up, is the 90-day pause. Nvidia shooting up. I wonder if Bitcoin now over 80,000. Bitcoin is now back above 80,000. It's at 80.1 thousand. Amazon is up to 180s. Tesla is up to 245s. Nvidia is up to 106. Baba is up to 102s. Apple up to 190s right now. 190s. Wow. Big market news coming out right now. And the market is bouncing back. Yeah, so again, this is the post he just made. He said he basically based it on lack of respect. Raised them 125% effective immediately. He said, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. Wow. Because he authorized the 90-day pause in tariffs effective immediately. That is what spiked NASDAQ and most other blue chip stocks, as well as lowered bond yields. Bitcoin over 81,000 as we speak. Nvidia up to 106s, almost 107s. Amazon at 182s. Tesla up to 250s here. So, wow. Crazy. Yeah, so that 90-day pause news is what's helping this for sure. Markets are spiking right now. Spiking up on the upside in a good way. In a good way. Yeah, look at the markets ride. Nvidia up. We got the Fed Minutes report coming out too, man. So this is even crazier as we speak. Wow. Markets are flying right now, flying. Nvidia up to 108s, NASDAQ up to 18.7s, 18.6s. Crazy. 90-day pause enacted. Microsoft up to 383s. All right, chat. I'm trying to track this stuff. All right, so we're starting to get a pullback now after this big swing on the upside. We still got 30 minutes basically until this goes live, chat. 30 minutes here. So wow. All right, so we got a big push up. Let's see if there's anything else going live though. Again, he raised tariffs to China by up to 125% from 104%. All right, so we got a big dip now. All right, we're up to 18.5s again, 18.5s. Wow. Craziness here, chat. Yeah, this is a big pump here, guys. This is a big move. This is a big move to the upside. Are you buying this little pullback right now is the question. I don't know. Let me do a poll. Does the market continue its rebound into the close? Yes or no? Vote on the poll. Let me know how you feel. All right, so we got a little pullback here. NASDAQ pulled all the way back to 18.4s. The FOMC Minutes report is in 30 minutes here, chat. 30 minutes. Man. Honestly, what's weird is that the China ETF even went up. Again, he raised tariffs charged to China by the U.S. to 125%, previously 104% effective immediately. All right, so we're at 107s on NVIDIA right now. Bond yields did bounce a little bit. NASDAQ back up to 18.5s here into the... we still got hours before the closing bell, too. Looking at our poll numbers that we just did, 55% of people think yes. 45% of people say no. Let me make sure this is right. All right, guys. NASDAQ is all the way back up to 18.6s here. NVIDIA up to 109s. Where's gold? Is gold falling? This reaction is for the 90-day pause news. Yeah, of course it is. It's not from the, market. The market's not going up because he's doing a larger amount of tariffs. This is going up because of the pause news. I'm not happy until we end. Green market too volatile. This can change. Yeah, absolutely. It can. Gold is flat. Yeah, I don't think it's going to go up. Bitcoin hit 81s. All right, guys. So, again, we have 25 minutes left. 25 minutes left. Sheesh, dude. What a weird time right now. Yeah, so the WTO on U.S. and China trade tensions. Preliminary projections suggest that merchandise trade between the two economies could decrease by as much as 80%. 80%. I'm worried about this because foreign relations are important. All right, guys, look at the market still turning up. NASDAQ is almost back up to 20,000. Wow. And look at yields, too. Yields are decreasing, which is a lower interest rate sentiment right here. So if you look at this, yields are decreasing, lower interest rate sentiment, markets flying back. Wow. NASDAQ has flown back huge percentages already today. Still got a ways to go before it hits those highs it did once before, but it's looking a lot better. NVIDIA back up to 110s. That's a great number. Honestly, NASDAQ back up to 19,000 here. That's a great number as well. And again, we got the FOMC Minutes report in 25 minutes. 25 minutes. All right, chat. I'll be right back. I got to grab something. I will be right back. Right back. All right, guys, what did I miss here? Is the market still pumping? So watch 19,000. Watch 19,000. That's a big whole dollar level for NVIDIA. Big whole dollar level. Thank you, baby. There it is. All right, look at that 108 level holding support here. All right, so look at NVIDIA still tested up here. Let me put the chat up here, guys. My bad. Here, I'm going to pop out this chat. Again, we're going to break down the full FOMC Minutes report in a couple minutes. I'm trying to... So, again, what happened is that the president... Here, look, I'll put this up on screen. Raises tariffs charged by China to 125%, but he also did a 90-day pause. The White House spokesperson says higher tariffs since China imprudently decided to retaliate. Tariff level will be brought down to universal 10% during negotiations. We got 2,000 people here already, so let's see what we get. We still got 20 minutes left until this report drops. I'm excited. All right, so we're dipping down. We're at 108.34s. 108.34s. All right, so we're still decreasing a little bit more here, chat. We're still dipping down some. I just want to see if we hold the gains into the opening bell, especially with like everything going on. All right, so we're down, dipping down 18.5s. Watch 18.5s on the NASDAQ. I think that's an important spot. I don't think we're coming back down. Sorry, I'm kind of multitasking as we speak. Amazon still at 185s. We're at 18.6s here. All right, so we're still decreasing. I'm trying to look up other news is what I'm trying to do here. Lost 22,000. Well, if you're shorting this market, you know, you're kind of shorting a market that's down 27% already. I'm not saying it's wrong to do that, but you do what you want to do, chat. It's at Beginner Trades if you want to follow me on x.com at Beginner Trades. Yeah, again, so yesterday the rumor came out that it wasn't real, the 90-day pause, and then today he did enact a 90-day pause. Treasury Secretary Bessent says countries who did not retaliate will be rewarded. China tariffs being raised due to retaliation. Yeah, so. All right, so Nvidia down to 107s, Nasdaq at 18.5s. Yeah, again, chat, we got 15 minutes before the FOMC Minutes report. All right, chat. All right, so again, yeah, this is honestly interesting. So this is one of the things I'm watching. Here's FXI, which is a Chinese large cap ETF. It tracks large cap Chinese companies. You can see it originally reacted positively to this 90-day pause news, which I thought was kind of funny because they're excluded from the pause, correct? I'll have to go back and look deeper into this. And now we're pulling back to under 31 here on this one. I'm trying to look in more deeper on this as we speak. Again, FOMC Minutes report is due in about 15 minutes. Yes, China is excluded from the 90-day pause announced by President Trump today, declared a 90-day suspension of tariffs for most countries, reducing the temporary tariff rate to 10%. However, he simultaneously increased tariffs on Chinese imports to 125%, China, citing their lack of respect for global markets and ongoing unfair trade practices. Now, our markets are still flying up, but the tariffs there are still going to be stringent. Tesla's bouncing back up to over 250 as we speak here. And again, this is all heading into the FOMC Minutes report in about 14 minutes. 14 minutes. All right, guys. So I'm tracking one more thing here. Hold on one second. We're back up testing that 18.8 level in the NASDAQ. NVIDIA up to 109s. Where's Apple at? Apple's still going to get hit with some of these tariffs. And again, we got the FOMC Minutes report, which is a breakdown of the last FOMC meeting going live in about 13 minutes or so here. All right, so we're testing that 18.8 level here, 18.8s. I'd still push it up. Yeah, it's usually decreasing 4%, but let me make sure the halt codes aren't going to kick in here. Okay, so yeah, the halt codes are actually on both sides of the S&P. They can be for both the upside or downside. Yeah. So it can be on either side of this, it looks like. So the halt codes can go either way here. All right, NVIDIA at 108. So we're testing the top of that range, but we've had huge upward motion. And since, yeah, micros aren't necessarily safe either. I'd just be really careful trading right now, to be honest. I'd just be really, really, really careful. Still testing the top of that range. This is abnormal. Well, yeah, I mean, I don't know if it's abnormal, but I think this is kind of normal right now. Somebody said, dude, this is one of the unhealthiest markets I've ever seen. Fundamentals don't matter. Tweets do. Somebody says, the FOMC likely to impact anything if it's the same result as January. Yeah, I don't know. With all the crazy volatility, you don't freaking know, man. Who knows? Definitely a little out there right now. Nvidia at 109s. NASDAQ at 18.8s. John, why are prices off? IV issues? Probably. I mean, they're just, yeah, it's just volatility going through markets right now. Gold is all the way down to under 3,100 today after riding up all morning. Hopefully you guys are being safe here. We still got 7 minutes left. 7 minutes left. Yeah, I mean, people were mad at him for the market going down, and now they're mad the market's going up. I don't know what the market's going to do, Chad. I really don't. I think you need to just be very, very careful. You know, the market's kind of risky right now. Just be very careful. Seven minutes until the FOMC. 6 minutes, really, about, yeah, 5.5 until the FOMC minutes report. A detailed breakdown of why the Fed did what they did the last FOMC meeting. What do you think it's going to do to push the gold market up? I don't know. I think today's incredibly volatile. And then we have CPI inflation data tomorrow, which is even more interesting. Right, so we got CPI inflation data tomorrow. We got the FOMC minutes report today. We have PPI inflation data on Friday, as well as the University of Michigan Consumer Sentiment and Inflation Expectation Report on Friday. Just a very busy time right now. Y'all be careful. Yeah, if inflation comes in high, the market might panic even more and come back down, you know. So, and again, I'm not saying I agree or disagree with any of these actions. The NASDAQ is still down, like, you know. NASDAQ just bounced back about a third of this crash that we've been in, though. So NASDAQ just rebounded back up. Here's a dip, and then we're back up to here right now. So this is where we are now. Heading into the FOMC minutes report in 5 minutes. We are right here. So that is where we're at now. Let me know if we're going to keep going back up. What do you guys think? Good thing I was streaming right now. CPI expected to drop to 2.6 from 2.8. Trueflation says 2.3 for the first time. Expect them to look at. Yeah, maybe. All right, here we go. 4.5 minutes. 4 minutes, really. Timer's a little bit early, but 4 minutes. Yeah, it's crazy, honestly. Did we get any news? We got 90-day pause on tariffs for most countries. 125% tariffs on China. Announcement today. And we got the FOMC minutes report dropping soon. I don't know if it's going to even make any type of big push here. We're at 18.8 prior to this report coming out in 3 minutes here. You know, we got 3,000 viewers right now. I don't know if this report's going to do anything. We'll see. I'm going to break it down. Don't worry. I mean, I'm going to break it all down like we always do here, chat. But yeah. All right, here we go. Okay, so the last meeting was March 19th. All right, we're ready. We got 2 minutes here, chat. 2 minutes. We're gonna break it all down as soon as it happens. I'm gonna summarize everything for you guys as soon as it happens. All right, you guys ready? So again, be ready here. We have less than 1 minute here, less than 1 minute. Again, remember, this is not an FOMC meeting. This is a detailed breakdown of why the Fed chose to do what they did. It's a reaction to the last FOMC meeting, chat. So remember, this is not an FOMC meeting. It is a reaction to the previous FOMC meeting on March 19th. They might give outlook and forward-looking statements. It's a 12-page document. We're going to use AI. This timer's early. It hasn't dropped yet. We still have 30 seconds. I'm gonna use AI to break everything down that's in this report live right here, so you'll be able to see exactly what's going down in this report, specifically outlook and forward-looking statements and guidance here. And 20 seconds, chat. 20 seconds. Hit the live button next to the play button. Markets are breaking the highs. Nvidia over 110. Nasdaq testing 19,000 right now. So, all right, here we go. 3, 2, 1, and here's the report live right now. Hold on, give me a second. Wait for it. Wait for it. All right, so markets actually surged up just now here, chat. So markets actually surged up. Again, wait for it here. Let's see, what is this? 319 is what it was, right? Yeah, still waiting for it to show up. All right, so here's the Fed Minutes report. We got it here. Here it is. All right, so give me a second. We're going to summarize everything. All right, it's specifically focusing on forward-looking statements. We're going to summarize this whole report. Market's pushing up right now. And so, yeah, stick around. Here is the summarization. All right, so here's the breakdown. Again, stick around. Here's the breakdown. Waiting for AI to interpret it. We already have our prompt that's going to break down specifically forward-looking guidance first. Forward-looking guidance first. All right, so forward-looking outlook and policy guidance. The committee maintained the Fed funds rate at 4.25 to 4.5 amid elevated uncertainty and persistent inflation measures. Almost all participants supported slowing balance sheet runoff, which is slowing down quantitative tightening. Starting in April, Treasury cap is reduced from $25 billion to $5 billion, 80%. We talked about this last time, that they emphasized the move does not signal a policy pivot. Members agreed policy is not on a preset course and future rate decisions will hinge on incoming data, particularly inflation and labor conditions. The committee judged risk to inflation remain tilted to the upside, while risk to employment and growth have increased on the downside. If inflation moves, inflation proves more persistent and economic activity weakens, the Fed is prepared to adjust policy accordingly, signaling flexibility in future actions. Focus was on maximum employment, which is defined as broad and inclusive, not directly measurable and subject to change over time. Participants discussed the usefulness of indicators like the unemployment rate, EPOP, LFPR, and job vacancies engaging labor health. There was broad agreement to possibly revisit the, quote, shortfalls language in the policy strategy, especially given tight labor market and persistent inflation. Committee members want the policy approach to be robust under varied economic scenarios, ensuring transparency and flexibility for the public. Treasury yields declined 25 basis points, equity prices fell, credit spreads widened, largely driven by trade policy fears and weak consumer data. Fed funds futures price shift lower, reflecting increased downside to risks to growth, even as the model path remained steady. Inflation expectations were mixed. Near-term measures rose, higher inflation potentially in the near term, but longer-term expectations remained well anchored. Repo market conditions are tightened. On RRP balances dropped to $59 billion, suggesting limited buffer if reserve conditions worsened. In terms of staff economic outlook, GDP growth downgraded slightly due to weaker than expected spending and tighter financial conditions. Inflation projections were increased for 2025, driven largely by anticipated trade and tariff policy impacts. Inflation expected to gradually return to 2% by 2027. Risks are skewed, downside to growth, employment, upside to inflation. Staff highlighted high uncertainty for policy developments, including trade, immigration, and fiscal. Headline PCE was 2.5%, core was 2.8%, relatively unchanged year over year. Labor market was stable with 4.1%. Unemployment, job growth is solid but slowing, they say. Wage growth is moderating and labor indicators like job vacancies are cooling slightly. Retail sales and sentiment is weakening, but real GDP is expanding at a solid pace of 2.3%. Businesses and consumer sentiment deteriorated, partly due to tariff fears and trade policy uncertainty. Import activity increased ahead of tariff hikes. Global growth was soft, especially in Europe and Mexico, but some modest rebound noted in early of 2025. China set a 5% GDP target backed by new fiscal support, and inflation abroad mostly near targets, though LATAM saw increases due to currency depreciation. Many major central banks like the Bank of Canada, the ECB, and the Bank of England eased policy, except for Brazil, which actually raised rates. Global sentiment also weighed down by tariff uncertainty, which seemed to be correct because tariff fears influencing the market. The NASDAQ testing 19,000, NVIDIA over 110 here, chat. Rates on mortgages and business loans declined, tracking treasury yields. Credit remained available for large, high-quality borrowers, tight for businesses. Consumer credit delinquencies ticked down slightly, but remains elevated versus pre-pandemic levels. Committee discussion and risk assessment. They think inflation is still elevated and tariff-related pressures could boost prices further this year in 2025. Labor market balanced. Wage growth slowing, but some layoffs linked to Fed funding cuts and tight immigration might pressure certain sectors. Consumer demand is showing mixed signals. Higher income spending may be slowing. Businesses are pausing investments due to policy uncertainty, especially around tariffs. Many see the auto and AG sector at risks from tariff impacts. Again, so they did say that they did not that the reducement in the QT in treasuries did not signal a rate pivot or a policy stance shift. Some members still prefer continuing runoff at a current pace and using traditional tools of strain. And so, yeah, that's basically it. The market, honestly, didn't have a huge reaction to the FOMC Minutes report today. And again, just to go through this one more time here, chat, so you guys can understand what we're looking at. This is the FOMC report. It's a reaction to the last Fed meeting. 3 weeks before the next Fed meeting, this report drops. It's a 12-page document. We just used AI to summarize, putting outlook first, guidance first. And again, that outlook and guidance said GDP growth downgraded future-wise, slightly due to weaker than expected spending and tighter financial conditions. Inflation projections increase short-term for 2025. Trade tariff policy impacting that. They think inflation expectations are going to gradually turn to 2% by 2027, they think, though, and risks are skewed to the downside to growth for employment and upside to inflation. So a lot of people are going to be yelling stagflation from this. Staff highlighted high uncertainty from policy developments, trade, and all that stuff. So yeah, here, I'll post this in the chat. This is a really good breakdown of it. All right, so here you go. Yeah, I mean, I didn't think it was gonna really move stuff too much. All right, so here's the full report, though. Those are the projections from the FOMC Minutes report. NASDAQ at 19,000 just got rejected. It's at 18,870s now. 18,870s. Oh, man, what a crazy time. And again, essentially what happened here is that the Fed or that the president increased China tariffs to 125%, put a 90-day pause on most other countries. This has caused a big, abrupt upward push in markets right now. You see the upward push obviously here. This is a huge move on the upside, a big push up. The FOMC outlook, in my opinion, showed worse outlook. It showed higher inflation short term, weaker economic short term, which obviously ain't good. But I think this is still pretty optimistic regarding the 90-day pause on tariffs, if that makes sense. All right, so again, we just did an x.com post summarizing all this stuff as well if you want to check it out. And again, we're at beginner trades, at beginner trades. Also, guys, let me know if you think we're going to hold these gains. I did a poll here. 61% of people think the market continues its rebound into the close. 39% says no. Yeah, the 10-year treasury yields, which follow interest rates, by the way, are basically flat, chopping back and forth. The interesting one is Apple. I think, Apple gets a lot of stuff overseas, China specifically. You would think Apple might negatively react to this, but we had a big upward push from this report here. And again, if you want to help support the channel, check out Top Step. If you want to learn to day trade, most day traders lose, right? And this is a sponsor of mine, so I'm biased because I get paid by them. But I think it's genuinely good for day traders because day traders lose money. Most of them do. In the first few years while they learn, almost everybody loses. It's called a market tuition. And so you can either fund your own account trying to learn day trading and probably lose it, thousands of dollars potentially, or you could try Top Step. They give you a 50K demo. They test your skill. It's a great way to learn. It's $49 a month for the base one. They give you a 50K demo. If you can make 3K without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. You get to keep your first 10K in profit as well. So that's very similar to funding your own account. If you fail, the base one's $49. It's not the end of the world. When you day trade futures, you're day trading the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. You can day trade commodities. Very similar to day trading stocks if you day trade indexes or indices. Great way to learn. And Top Step's the most legit. They've paid out almost $200 million in the last 4 years. They fund thousands of traders. And if you use their native platform, Top Step X, zero commission. If you go through my link, you want to make sure to sign up to Top Step X because zero commission. Although, again, they are an affiliate of mine. As I always say, guys, I'm not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. Understand CFDC 4.41. Hypothetical or limited performance have limitations, guys. Or hypothetical or simulated performance have limitations. Somebody's asking me where the Fed meeting is at. The FOMC Minutes report is not a Fed meeting. It might say in big yellow letters right here, Fed Minutes is not an FOMC meeting. It's a reaction to the last Fed meeting in a 12-page document report. And again, the outlook that they gave, I'm going to go over it one more time. The outlook that they gave in this report said that they say GDP growth is downgraded slightly due to weaker than expected spending and tighter financial conditions. Inflation projections were increased for 2025, driven by anticipated trade and tariff policy impacts, basically the tariff trade battle we got going on. They think inflation will, though, gradually return to 2% by 2027. They say the risks are to the economy, downside for growth and employment, and to the upside for inflation, which sounds a lot like stagflation. Staff highlighted high uncertainty from policy developments, trade, immigration, and fiscal. So, yeah, y'all be careful. Does this market hold? Yeah, this is honestly kind of crazy market, to be honest. I've been streaming and trading for years and years and years. This is one of the... what I'm curious about is seeing the rate cut odds here. This is probably going to go way down. Yeah, so look at the odds for a rate cut next meeting in May. Look at the odds now. So the current odds are now all the way down to 20%. 20%. 20%, guys. Wow, I'm going to take a picture of this. 20% chance, 80-20 right now. Now only 20% for May. Rate cut is now only 20%. Yeah, y'all just be careful right now. A lot of crazy stuff happening in markets today. Markets are pumping up too, man. Look at this move. So, wow. Nvidia's still up to almost 112s here, bro. Nvidia has had one of the biggest bounce backs because, again, like, Nvidia has bounced back all the way back to where we were in February, right? Nvidia is where we were in February right now, and in some ways, and where we were, yeah. So Nvidia's had a huge bounce back. It's up to 111s, 112s right now. So that's one of the bigger bounce backs in stocks. Tesla back up to 260, still down a lot, but back up a lot too. Amazon back up to almost 190s here as well. So yeah. Again, give me a follow on x.com. You can see my tariff news update here and rate cuts. There's the link right there. I post stuff all day about news, economics, markets. Check it out. There's the link. Great way to help support the channel. What effect would rate cuts have? Rate cuts stimulate the economy in a time where a lot of economists think that we're in a current negative GDP quarter. A lot of economists think that the last quarter, quarter one of 2025, was negative. That ended just in March. And so rate cuts would stimulate the economy in what a lot of people would think is a really needed time for that. The problem, though, is that rate cuts might cause inflation problems to get worse, right? So if inflation comes in hot, rate cuts are going to make those problems worse, not better, because they're going to unlock even cheaper access to money, and then people are going to spend more, and then businesses are going to raise prices even more potentially. And that's the fear by the Federal Reserve. And so their job is to keep it balanced. They don't want to just constantly stimulate the economy, because that sounds good, always having this super hot labor market and economy. But if inflation's growing at such a rapid pace that the economy can't keep up with it, it's all moot, you know? So like the job of the Fed is to keep it balanced. That's why they're not just constantly cutting rates, because inflation has been a big fear. And one of the real reasons, like, inflation spiked up 8-9% in 2022 because they did so much economic stimulus in 2020. 2020 happened, they brought rates down to almost zero, trying to save us, understandably, from all the stuff going on. They sent out stimulus checks. They did QE, which is a more desperate measure in order to inject liquidity into the market through money printing, basically. And we also had supply chain problems and a lot of stuff. So the consequence was 9% inflation by 2022. And so then they pivoted to the other side. They started doing QT. They started raising, doing a bunch of rate hikes, and they're trying to push inflation down. And inflation doesn't go down, it slows down. Inflation has slowed down since then. Again, right now it's at what, like 2.8% or something. And CPI inflation drops tomorrow. But in the landscape of everything going on, this is all super important. So just, again, we will be back tomorrow, guys, for CPI inflation data. And so CPI inflation data drops tomorrow, 8:30 Eastern Standard Time. We are going to stream the entire thing. So White House officials are reportedly conceding that the potential TT-US deal is off the table for the foreseeable future. It may be forever, as the trade war focuses solely on China. So this is bad for TikTok. That's who this is bad for. You want to know who this is the worst for? US TikTok users. You know, they're in trouble, I think. Obviously, that's bad. That ain't good. Hey, shout out to everybody that follow me. We got a whole gang of followers. Appreciate that. And listen, guys, my whole thing here, if it's your first time tuning in, we still got how many people? We still got 3,000 people here. Listen, I don't even claim to be a good trader. I don't sell a course. I don't even claim to be good. Top 3 worst trader ever is my tagline. I'd rather set the bar low. If I do better than that, cool. But I'd rather set the bar really low. And so if you want to support somebody that actively tells people they suck as a trader, if you want to support somebody that drops all the economic data as soon as it happens, if you want to know what's going on in the U.S. economic policy, geopolitical stuff, macroeconomic policy in the U.S., Follow this stream. We got CPI inflation data tomorrow. We have PPI inflation data Friday. We got University of Michigan consumer sentiment and inflation expectations Friday. Next week, we got retail sales. A lot of stuff's going on. We had the Fed meeting, and we had Jerome Powell's speech last Friday, and we stream all of this stuff completely free, live. It doesn't cost anything. I just want to give people a free resource. So I hope you guys appreciate it. Hit the subscribe button. I'm going to get out of here. Y'all be safe right now, guys. Markets are pumping up. But with the range of volatility that we've seen over the last few weeks, just be really, really careful. Really, really careful. Yeah, CPI tomorrow. Again, we're going to stream it live. We start the stream early, too. So subscribe, hit the notification bell if you want to watch it. CPI tomorrow is expected at 2.6% year over year. 2.6% CPI inflation is what it looks like. And again, we're going to stream it all live today. Y'all be safe. Good luck. Hey, love you all. Have a great day. Y'all be safe. Don't try not to lose. Account preservation is sometimes the best move. Y'all be good. Have a great day.